Jeff coming to you from Full Throttle Traders. Today, I want to take a few minutes to just explain what happened in the market in here. Yeah, we know it's tariffs, but we've never been in this situation before where we're actually encountering what was hoped to have been reciprocal tariffs that surprised the market by going a little bit overboard. And the market doesn't like surprises, as you and I know. We haven't had this type of a drop, but I can't tell you when. Maybe the yen carry trade, maybe going back in COVID, some of the early days in COVID. But outside of that, in the last 5 years, this was significant in here. A lot of things got brought back. I mean, a lot of times this is when the baby gets thrown out with the bathwater, that there are a lot of good stocks that were even completely undervalued. And now they're way down here, but there's not enough people willing to have confidence at this point to even take undervalued stocks and make it their own. I'm sure there's nibbling going on. There's a few things like that. But if you had been long in this market for the last 2 years, last few months, it'd have been tough to maybe build in a position by going in much, much smaller and adding just some of the drops, but in a very small case where it really doesn't matter. But if you've been going in with a more of a consistent basis for higher prices, unless you just happen to get maybe a Coke, Tap, Coors, Molson Coors. There's a few out there that are kind of be more consumer defense that are working okay. But at the end of the day, they're higher now, but they weren't necessarily higher when the market was up there. So it would have been very difficult, almost just a dart's throw to find that. So let me break this down for you. Full throttle. I'll give you some details on what we're doing now and maybe what to look for moving forward. Hang tight. All right, I'm back with you here. Today I want to focus on the SPY specifically here. You can look at the Qs, look at the SPY, but at the end of the day, they're both pretty well beat up. So let's take a look here. This is the original Fibonacci that I had drawn in here, and I'll kind of take this back off because this was the one before we made the new lower low here. So I got this fib tied into here to the gap. Now, before I get into that, I'll talk about what we're doing here. Now, we had a 20-point drop. It hurt the market significantly. Here's what I want you to do and think about this going forward. If you jumped out of a 10-story building, there's a good chance you're not going to get up. People may have, depending on where you land, or how you land. But the chances are, the odds are you're calling 911. And that's just a normal drop, 6, 8, maybe 9 points in the market. But when you drop 20 points on the gap and rush it down to about 30 here, I think we closed around 28, so a little bit lower than that even, around 30 points. That's like jumping out of a 20 or 30-story building. So the higher you go and the more you drop, the less of a chance you get a chance to pick back up. Now, I was hopeful today that maybe they would have a late day rally. I mean, late day grind, not almost create a bear flag out of it. So we didn't really get that. It pretty much closed down here at the darn low, around 536.70 to be exact. And in pre-market, we're even a little bit lower than that, I believe. Yeah, 54. So take a look at we dropped from here. We were up to about here on the initial part of the tariff conversation, right? Yesterday when Trump took the mic about 1 o'clock or 4 o'clock Eastern or so, maybe a little past that, and things were looking promising. And then when he announced and came out with the graphs, market saw something different than what they anticipated. Market will sell and ask questions later. It's exactly what it did. It sold off profusely down to, I saw 22 points yesterday, and then opened up about 1150 down, went down to about 1750 or so, closed right about 1680 or 70 or 80. But this was not taken lightly. Number one, you had not only a wide range bar, there was a little tail here, but look at 3 days of that and then gapping underneath that. There is just added fuel to the selling fire down here. Although we had this a little bit of a punch up, right? Over just a very few minutes of time, it very quickly got sold into. I want you to look at the volume in here. And I mentioned to the traders, I said, look, we ended up around 125 million in shares. Currently, you can't see it right now, but the volume is 148 million right now. This will be going down. One of the largest, that's 24. We're actually higher than that in pre-market. I don't actually have that up. If I can pull it in here, maybe. Yeah, 148 million shares. This is definitely putting a huge damper on that. Now, people say, well, how much more do they have? This market can keep going down and down and down. It doesn't need to bounce. The reality is, though, there are people that will bottom fish down here, and if that becomes a little bit more sustained, people will jump on that board. And for a short time, you'll have a little bit of a momentum moving back higher. But the big money controls the overall direction, particularly of our economy, which is going to be one or all of the indices here. Now, key point in this, that once we rallied up in here, we closed here above the 8. This is just above the 8. The 21 was coming in above here, but this is a 20-period moving average, which is center part of the Bollinger Band. If you took that out, I looked at the daily chart and I extended this out. Always your 20 by default is going to be the midpoint of the Bollingers right there. So interestingly enough, why technicals work, that was important to know that we went above there by the tune of about $2 or $3, but closed right back out the midpoint of Bollinger Bands. And then news came out, we gapped up at least a little bit. Then, market called the direction of the conversation and they gapped it down pretty quick. But you can see this wide bar. But look where the 8-period moving average was here. Almost like a little mini head and shoulders at the low here, right? And then the drop, the up, the down. But you can see the latest trend line. This is a decent angled trend line. If you recall my last video, I talked about this area right in here, 38.2 and the 50%. Was going to be somewhere in here was going to be the danger zone, meaning that if we don't clear this area up in here, we could go down and break the lows. Now, I didn't think it would have done this significantly, but in fact, it did. But the interesting part, notice here, level 1, so pivot here, support, then I've got level 1 or support pivot 1. And then I like to use support 2. Now, I drew this before the case, and it went right down within a few pennies of the support line in this area. You can see it right down here at 557.08. I think it's about where it was at, 557 and I'm sorry, 549.60. It's about where it is, 549.60. And then it bounced off this area, right? Remember, this is not a trend line. This is Fibonacci in here. Came back, put in a slightly higher low, actually right here. A little bit of down here, but not too much. Higher low. We broke the high here. Things looked up. We're at the flat 200. Came back down to the 8 here. Once we got below the 8 and struggled with the 20 in here, they just couldn't make it past the 8 before it actually took out the low here. Interestingly enough, you can see the low on this, not that much, and ultimately closed back inside the pocket, meaning that it closed back up above that area. What's very important from a technical standpoint is that if you breach that, that's one thing, but where you close could be something else. And when it doesn't move that far down beyond that angle, it's just more semantics in how it just kind of, the bids and asks carried it down a little further, but bounced back up, ultimately to near the high of the day. But the key was when we gapped underneath that level support 2 here. So this became the floor, right? That's what the floor, solid here. We were thinking that prices might have cleared this on the tariff news, came back in, bounced off the pivot in the back of the trend line, and then went higher over here. That would have been, if things checked out type of reality. Well, things didn't check out. It came down here. So this was the floor, right? We gapped under this. Now this becomes the ceiling, right? Meaning that we're going to have a struggle getting back above this area. Unless something happens, maybe let's say they come in tomorrow and say, hey, we're going to negotiate these tariffs down here. Market is going to fly, right? But we don't know that's going to happen. That's truly speculation and just more guessing on our part. But again, you can see this market close at the low. If you look at the overall range of the market, this was an $11 range. You take the gap in there, 64, down all the way down to this area here, 54, 44, 34, $28 move down here. Again, significant to the tune of almost 1,700 Dow points down. NASDAQ about 5.6 down. You don't have many days like that. 2%, it usually starts correcting itself. Overall, if you look at where we are in the market right now, and you take the 536 at the 613, and you're 87, so we're about 13% price correction in here. At 10%, we've moved actually officially into a correction mode. We are there now. Now, we're not near necessarily a bearish trend here. It's usually around 25, 30%, but we've definitely made a pretty good headway in a short period of time. Again, a lot of stocks are kind of getting buried on this just onslaught of news. There's nothing about these markets right here that's not influenced by just direct news, right? Just news. And that's creating this havoc in the markets in here. So we close at the low. Typically, that means that we open midpoint or lower, mid to the bottom or lower. We could still go lower for 1 to 3 more days. My guess is we'll probably have a slight open up, come down and test the low, and then bounce some back in here. But the bounce probably on this bar won't be more than about 21%. And again, unless there's news that comes out that suggests differently, it could engulf that bar, but it's unlikely this early in the stage. So it's just got a whole new area. You can see as I kind of bring this in a little bit here, it really cleared this area here. There's really nothing left to this, right? This isn't a pivot area you have to be concerned of. Why? Because once prices trade above that and now nearing below that, that supply is nearly taken off. And also the amount of time that went by, that has been dissolved for the most part. There's still some there, but not a lot. But you can see this is the next point of interest, 511. And market may have eyes on this. I'm not saying it's going to go straight down there, but this could be an actual landing place before we begin to kind of chop around and maybe people start thinking bargains again. And they forget this tariff news. I'm not saying they're going to forget it, but they, the further you are away from something, the less of an impact it typically has in here. Again, market is just on the cuffs of just breaking back down to this 500 level right now, which is a pretty significant drop here. That will be probably close to 18% if we get there, 17% or so. So anyway, watch these trend lines coming up in here. Again, there's nothing really to know at this point until we move. Does this become some sort of an island reversal? Not if we open up down here. If we gapped up, that's another story. It's only going to happen off news, but this is significant, right? We could move back up and this will become a very high level support area somewhere in this range, but that's unknown to this point. Pretty much just kind of, I would hang back. I wouldn't necessarily get the market early. It's an either way thing. They are very volatile in here. VXX moving up today here over 62 on the VXX, 30 on the VIX itself. But I would just wait back for a couple of days. You don't have high odds of picking a direction here. The only thing you could do is maybe look, if you want to get in some sort of a short dated type swing trade, you could build a position or leg in. What do I mean by that? Simply just take your pick. Just say, I'm going to take a certain stock, and I believe that that's overdone, overcooked, and don't go in full. Go in at 15%. Go in, allow yourself 4 to 6 ads going down, right? Just small. Keep it small, because right now, the best you're going to make is a pop and a bounce back up. It's not going to go back to the highs more than likely that you're willing to sit for a long time and risk some short-term profits in there. But I would just sit here and wait. We'll see what happens tomorrow. Again, this is all based on what's going forward in here. The 8-period moving average suggests lower prices. Everything's in a pretty protracted downtrend in here. The volatility is range. If you remember the past video I talked about, right about in here, I talked about wide and whippy. And when we talk about the 4 stages of the market, stage 1 being more kind of a flat, not a lot of interest. Stage 2 becoming decline and trending. Stage 3 being a square top. Then stage 4 going down. Well, stage 3 is probably one of the easiest things to detect, because it actually means that stocks, or the volatility in the stocks, becomes wide and whippy. Now I'm looking at the market specifically. So a wide and whippy area like this, but we're not really going higher, suggests we are in a stage 3 market. Well, what comes after stage 3? If you're going down, right? There's only 4 stages. It's not a stage 6. It's a stage 4. We're going down below the area. And so far, that has played out. Now, will that continue? Well, that's forecasting. That's kind of high. That's forward thinking, and we don't know. The interesting part about this is that the way that news is so rampant these days, things are going quick, even in pre and post market in there. So, but it is living up to it. Wide and whippy volatility is indecision. It's back and forth. It's huge runs. That's a sign that we are getting into a stage 4 market. Now, the interesting part is with stage 4 doesn't mean it has to go straight down. It could go down just a little bit. That'd be a stage 4, and then it consolidates, right? It could pause for quite some time and then refresh and go lower, or go into a stage 1 on a short leg on a down flank. Stage 1, consolidate, be more kind of just kind of sideways, not that eventful, volume low, then take it back off into a stage 2. That's possible in here. But we were so overbought here overall. If you look at the weekly chart, we have a lot to give up. Here we are on the weekly chart. We have a lot to give up from that 380 lows back here, 370 through 348 low here back in 10/14 of 22. 2.5 years ago, that this market almost double in here, but we have a lot of room to fall in here. So there's some of that's just kind of taking the case right now. People trimming profits, trimming some of the positions because they know it's so far overbought. They'll pick it up on the swoop at low just to be able to add it. They don't mind bringing it back and cashing some of those checks now. So we'll see where it's going to go over the next 3 to 5 days. This is probably worse. Typically on an FOMC, it takes about 5 to 7 days for it to work out. We could be in that window where we have 5 to 7 days to figure this market out, what it's going to do here. So we'll know. Be careful, be safe. Remember, live full throttle traders, we don't trade what we think. We trade what we see, and what we see, pretty red, pretty bearish, pretty stage 4 potential here. So be careful. See you in the room.